Japan expected to enter recession despite Abenomics. The Japanese government released estimates on February 17, showing that their economy shrank 1.6% in the fourth quarter of 2019. Japan's economy was already heading for a recession, and the effects of COVID-19 may just be the final straw. Japan experienced a sales tax hike last year, while the country struggled with recovering from Typhoon Hagibis, a violent tropical cyclone that hit Japan in October. Analysts from Reuters had initially predicted that Japan would suffer a 0.9% drop. The estimates from Japan's government are much worse. Expert economists now believe that Japan's recession is inevitable, despite the government's efforts to prevent it. COVID-19, which originated in Wuhan, China, has infected over 71,000 people and kept wealthy consumers home. The most visible effect of COVID-19 on Japan's economy is its dent on tourism. In 2019, most of their tourists came from China, with 8.1 million overall. The hotel, restaurant, and retail industries are expected to be the most affected by the virus. Japanese automakers Toyota and Nissan also closed their plants in China following a government lockdown. Though the change in their output seems small, analysts are still unsure about its effects in the long term. Japan is now forced to face the reality of a recession despite the launch of Abenomics in 2013. Abenomics is Prime Minister Shinzo Abe's three-pronged approach to improving the country's economy. It focuses on structural reform, monetary easing, and fiscal expansion. Its shortest goal is to increase domestic demand and gross domestic product growth while increasing inflation to 2%. It took 4 years for Abenomics to show moderate growth in Japan's economy. In October 2017, Abe won another term, but economic growth has not been evident since then. Economists say that Japan's inflation has stayed below Abenomics' target. Citizens have also expressed concern over debt and structural reform. A fiscal stimuli are government attempts to stimulate their economy. Abenomics began investing in fiscal stimulus in 2013, with the country's second-largest stimulus package ever. Their economic recovery measures summed up to 20.2 trillion yen. Much of this amount was spent on infrastructure, including earthquake-resistant roads. In 2014, they invested in 2 stimulus packages worth 9 trillion yen in total. Abenomics' unorthodox monetary policy is the main part of Abe's plans. The Bank of Japan has injected liquidity into the economy. This means that they have bought government bonds or financial assets as a form of quantitative easing. The structural reform in Abenomics is aimed at reviving the country's competitiveness. This includes liberalizing their labor market and agricultural sector and increasing workforce diversity. The U.S. withdrawal from the Trans-Pacific Partnership in 2016 cast doubts on the Japanese economy's ability to survive it. The Trans-Pacific Partnership was a free trade agreement between the U.S. and Pacific Rim countries. The U.S. reportedly wanted a U.S.-Japan trade deal instead of the Trans-Pacific Partnership. However, Japan has yet to respond to the U.S. government's invitations to discuss it. Some economists believe this is but another hurdle in Abenomics' way.